Welcome, fellow tax professionals. In this video, we will be discussing the tax refund as it relates to an offer in compromise. I'm your host, attorney Robert Schaller, the author of the course. Certainly, every taxpayer wants to receive all the tax refunds that are coming to them, especially when the tax refunds are caused by an over-withholding on the taxpayer's employment check. But is the taxpayer entitled to the full refund? Well, it depends. And this course will decide and educate the tax professional on whether the taxpayer will receive that refund. So read this course, study this course, learn this course. It's key to the taxpayer's happiness. Enjoy. Let us explore the IRS's right to retain a taxpayer's refund emanating from overpayment of any tax or other liability. We begin with the general rule. The general rule is that the IRS shall retain all refunds due through the calendar year the IRS accepts the offer. Note that the key year is the year the IRS accepts the offer and not the year the taxpayer submits the offer application. Let's talk about an example with some assumed facts. Assume the taxpayer seeks to compromise the back tax liability by filing Form 656 in January of 2019. Assume the IRS accepts the compromise offer in August of 2019. Now let's assume the taxpayer is a W-2 employee with tax deductions withheld from the taxpayer's paycheck. In 2018, the taxpayer over-withholds taxes and would otherwise be eligible for tax refund absent prior year back taxes. And finally, assume the taxpayer also over-withholds in 2019. What do you think the result is? Starting with the 2018 tax year, the IRS retains the 2018 tax refund despite the taxpayer over-withholding taxes. Pursuant to the general rule, the IRS retains all refunds due through the calendar year the IRS accepts the offer. The 2018 tax year concluded December 31st of 2018 and prior to December 31st of 2019, the acceptance year. So the IRS retains the refund. The facts that the taxpayer filed Form 1040 in April of 2019 and the offer was accepted in August of 2019 are not relevant. The key date is December 31st of 2019, the year the IRS accepted the offer. Continuing with the 2019 tax year, the IRS also retains the 2019 tax refund despite the taxpayer over-withholding taxes. Employing the same general rule, the IRS retains all refunds due through the calendar year the IRS accepts the offer. The 2019 tax year concluded December 31st of 2019, and the IRS retains all refunds due through December 31st of 2019, the acceptance year. Therefore, the IRS retains the refund. The facts that the taxpayer filed Form 1040 in April of 2020 and the offer was accepted in August of 2019 are not relevant. The key date is December 31st of 2019, the year the IRS accepted the offer. So how is the refund applied? The IRS applies the taxpayer's over-withholding to pre-offer and compromise tax liability. The withholding is not considered part of any offer and compromise agreement obligation. More specifically, the IRS's retention of the refund is not applied to any lump sum payment option payment and not applied to any periodic payment option payment. Now let us compare the taxpayer's right to a refund emanating from overpayment of any tax or other liability for calendar years after the IRS accepts the offer. The general rule is that the taxpayer receives all refunds due for the calendar years after the IRS accepts the offer. Let's return to the same example with the same assumed facts. The taxpayer files Form 656 in January of 2019 and the IRS accepts the offer in August of 2019. But now let's add some facts. In 2020, the taxpayer over-withholds taxes and would otherwise be eligible for a tax refund absent prior year back tax liability. Assume further, in 2021, the taxpayer overwithholds taxes and would otherwise be eligible for a tax refund absent prior year back tax liability. What do you think the result is? Starting with the 2020 tax year, the taxpayer receives the 2020 tax year overwithholding as a refund because the refund emanated from a tax year after the year the IRS accepted the offer, namely 2019. The Form 1040 filing date is irrelevant. The same result occurs for the 2021 tax year. The taxpayer receives the 2021 tax year refund for overholding because the refund emanated from a tax year after the year the IRS accepted the offer, namely 2019. Again, the Form 1040 filing date is irrelevant. Thank you for listening to this video, and please spread the word to family and friends that Do-It-Yourself Offer and Compromise Academy is available to help taxpayers find solutions to crushing IRS back taxes. The music for this video was provided by www.bensound.com. You can contact the Academy at its contact page at www.diycompromiseacademy.com. Enjoy the online course and keep on learning.